Gold. Gold has started the year very nicely, a couple of relatively large green candles in 2023, and since the middle of December, it's gained nearly 4.5%. So perhaps it's time to have a look at what's going on in the markets. First, let me start the market review with the general stock market with S&P 500. On S&P 500, I basically see a couple of likely scenarios. One of the scenarios is a scenario where we probably have seen the short-term daily cycle low, the first daily cycle of the ongoing intermediate cycle, finish over here in early December with a relatively shallow drop and a quick bounce into the second daily cycle, which has already dropped to new lows. That would give us the first daily cycle lasting for 54 days right here. That's pretty close to an average, which is around a couple of months. In this scenario, the short-term outlook for the S&P 500 isn't very promising. The daily cycle has already topped very early and has already created new lows. That's not promising, as I mentioned. That would mean that we are perhaps in the process of making some sort of a bear flag. Perhaps one more test of the 50-day moving average or the middle of the Bollinger Bands, the 20-day moving average, before one last drop into the end of the second daily cycle. If that daily cycle takes place somewhere around the end of January, early February, that would be pretty close to the next FOMC meeting, which might be some sort of a driver for a turnaround in momentum. By then, though, the intermediate cycle will probably be more than 100 days long. Usually these cycles last for around a half a year, so would be probably past the midpoint of the intermediate cycle, meaning that there would be a pretty low chance of any new highs for the ongoing intermediate cycle. So just a bit of a bounce into a third short-term daily cycle before dropping down into the intermediate cycle low. So that's one scenario which isn't really contradicted by this optimism index on S&P 500, showing that optimism index has already come pretty close to this red line over here in early December, perhaps suggesting that the intermediate cycle has already topped. And yes, there will be bounces into new short-term daily cycles, but the chances of a significantly new highs are not that great. So that's the first scenario, which I think is slightly less likely than the second scenario. I perhaps give this scenario a 40% chance. And the second scenario is based on the fact that this drop down into that early December, very short, brief period of a bit of a decline before double top, was pretty quick and mild. So perhaps the daily cycle that began in the middle of October is still ongoing. So either we've seen the end of the ongoing daily cycle over here on the 22nd of December, or we are about to see that end of the daily cycle with one more quick drop anytime over the next few days. That would give us a daily cycle lasting for around 80 to 85 days, which is still pretty close to an average duration of a couple of months. Sometimes these cycles do stretch, as in the previous intermediate cycle, that first daily cycle lasted for 81 days. So if that scenario were to play out, perhaps a bit of a drop, or we have already seen the end of the daily cycle on the 22nd of December, that would be followed by a bit of a bounce into the second daily cycle of the ongoing intermediate cycle. Again, within this scenario, we still don't really expect significantly higher highs, perhaps a retest of the 200-day moving average before the second daily cycle drops into that daily cycle low, and we might or might not see the third daily cycle within the ongoing intermediate cycle, depending on whether the intermediate cycle turns out to be a relatively short one or stretches for a little longer. Looking at some examples, quite a few, actually 3 of the previous intermediate cycles did turn out to be relatively short. But whatever happens in the intermediate term, in the short term, I would expect some sort of a bounce into a new short-term daily cycle, perhaps over the next several weeks. And for daily cycles, looking at a shorter term optimism index, I like to look at this green line, the solid green line, a little bit difficult to see on the screen. That's the 10-day moving average of this SPY optics. And usually with every daily cycle, rather than the intermediate cycle, this 10-day moving average of this SPY optics drops below 40, drops at least nearly to the level of 30, indicating these daily cycle lows. Back in early December, with that brief drop I mentioned in the first scenario, this 10-day moving average didn't really drop below 40. But by now, into the second half of December, we see this 10-day moving average, the green line, did drop below 30, suggesting that that's where we likely saw the short-term daily cycle low, perhaps on the 22nd of December, or perhaps anytime soon with a new low on the price, and perhaps a high low on this index, suggesting some sort of a positive divergence in the short run. And as I mentioned, I would expect this scenario, the second scenario, to be slightly more likely. Perhaps I would give it a 60% chance. But again, nobody knows the future. We are dealing with probabilities here. So let me know what you think down in the comments below. Next, let's have a look at gold. Zooming in a little bit, the end of the previous intermediate cycle on gold was over here at the end of December. That previous intermediate cycle lasted for quite a long while. Now, zooming in a little bit, given the recent strength of gold as it just keeps chugging higher and higher all through December, I've made a note to myself that we have seen the end of the first daily cycle over here in early November, giving us a relatively short cycle lasting for nearly a month and a half. That does happen quite often with gold, with average duration of these cycles of around a couple of months. And we are now in the second daily cycle of the ongoing new intermediate cycle, and this daily cycle is now 62 days long. After a short cycle, to average out the duration, the next cycle can be stretched, so this trend higher might continue for a short while, but we are now into a relatively strong resistance zone anywhere between 1830 and 1880. That has been respected all the way since the middle of 2021 at least, and the 50% Fibonacci retracement of all of the previous intermediate cycles decline is in that zone as well. We actually broke that 50% retracement today. So while the intermediate cycle on gold is still pretty young at only 98 days long, so we still do expect relatively stronger gold prices. In the short term though, the cycle is already a couple of months long. Usually they last for around a couple of months, so perhaps there might be some short-term corrections anytime within the next, say, 2 to 3 weeks. Looking at the US dollar, gold usually trades inverse to the US dollar, but not always. Looks like US dollar might be ready to bounce into a new short-term daily cycle. The previous daily cycle was over here at the beginning of October. Usually, again, these cycles last for around a couple of months on the dollar as well. We have potentially seen the end of that cycle lasting for 87 days and ending over here on the 30th of December. We'll have to see a bit of a confirmation of that with a couple of local higher highs, but there is a chance that the daily cycle in the US dollar finished recently, and perhaps after a bit of a sideways move, after a couple of confirmations of local higher highs, we might see a bounce into a new daily cycle in dollar, which might provide that temporary weakness in gold before a push into the third daily cycle of the ongoing intermediate cycle. Looking at optimism index in gold, the optics is still only at 45. Usually intermediate cycles top with the optics significantly above 50 and even above 60, perhaps closer to the red line above 70. So while in the short run we might see some sort of a corrections down into the short-term daily cycle lows, again in the intermediate term the outlook is still promising in gold. Sometimes I like to compare the recent action in gold over the last several months to what happened in the middle of 2018, as gold continued down for quite a while into that intermediate cycle low in August 2018 as well, where the optics dropped significantly below this green line, all the way below the level of 20, and even after a relatively modest intermediate cycle rally after that, this optics still managed to poke above 60. Currently we are still at 45, so as I mentioned, even 98 days into the ongoing intermediate cycle, it still looks like in the intermediate term, gold can still push higher. Lastly, I want to have a look at natural gas. The cycle is still relatively young at 72 days only. Usually these cycles on natural gas last for 4 months. But of course, sometimes we have relatively short cycles, so with the shortest since the middle of 2017 at 53 days. So we might see a cycle low anywhere around 70 to 80 days. That is possible. Whether it's likely or not is a different question, as natural gas at the moment is pretty risky. As the members at myfinancesteacher.org know, we don't have any positions in natural gas at the moment, but it's kind of getting interesting. RSI is into oversold at 26.7. We see natural gas poking several times below relatively wide Bollinger Bands. Usually poking below or above relatively wide Bollinger Bands multiple times is a sign of a turnaround in momentum, at least temporarily, to relieve some of the stretch from the moving averages. Perhaps a return to the middle of the Bollinger Bands is likely. We see natural gas often returning to the middle of the bands after poking outside those Bollinger Bands. Additionally, there is a very interesting pivot in price over here, nearly exactly 1 year ago on 30th of December 2021, a bit of a pivot around $3.50 on natural gas. And we are approaching that level right now. The prices are already below $3.7. But let me remind you that seasonally, natural gas is dangerous right now. Seasonality shows that December and January are both usually red months for natural gas. So within January as well, we might see natural gas close the month down, at least as suggested by seasonality. But looking at the optics, it's approaching 30. It's at 32 right now. So even if the optics were to drop further down to this green line under 30, perhaps a short-term bounce is likely. Again, let me emphasize that playing the long side on natural gas is dangerous right now. Seasonally, it's a bad idea. But I am getting interested in this pivot around $3.50. We'll have to see what price does over the next few days. We don't want to buy a falling knife. If you see another sort of a local low that allows you to manage the risk, you might try to take a position for a bit of a fill of this recent gap around $4.6 on natural gas. Perhaps followed by the last drop into that cycle low, closer to an average duration of these cycles. So there is some food for thought for you on energy. For more on energy, there is potentially a lot of interesting developments coming up in oil and uranium. Join us at myfinancesteacher.org. And even before you visit us on the website, make sure to give this video a like and us a comment as well to help with the algorithm, and share this video with your friends. Have a nice day. Bye-bye.